Hello, everybody. My name is Michael DeJoy, and welcome to the Dash Trader Newsroom. This is the market melt up as oil prices fall update. We are on 11/22 here in November, the day before Thanksgiving. But obviously, I want to wish everybody a happy Thanksgiving from everybody here at Dash Trader First. My name is Michael DeJoy. I'm Director of Educational Services here at Dash Trader and a licensed professional trader. Been in the industry for many years. First things first, let's jump right to the meeting that didn't happen. OPEC reschedules its policy meeting, causing oil prices to fall below $75 a barrel for the first time in months. And I'm just going to bring up my laser pointer and show you, the price of oil has been dipping. As we can see here on my chart, we have a little bit of a shoulder, head, and shoulder pattern. We're going to look at this when we go to the charts in a few minutes with Dash Trader. And then you could see that we've kind of gotten down here. We gapped down big. We faded up. I believe part of this is also slowing of demand. So as the economy's demand is reduced, as the economies of the world slow down, we start to see that oil prices or demand for oil also slows down. That is not what we're seeing anywhere else in the markets. We're seeing all kinds of stock market melt up activity. Now it is partially due to the price of oil. And I say that because, as you know, oil is a key component in the price of everything. It is the prime commodity. It's how everything gets to the store or the final destination. It's how the things that you buy on Amazon get to your house with the truck, which needs oil or gasoline to get to your house. So oil is factored into the price of everything. So the stock market continues to march higher post the Fed pause. The Fed pause is something we talked about a little bit over 2 weeks ago. Obviously on earnings results as well. Will we break out to the upside, or will we see profit taking into the end of the year? And I'm just showing here, this is the S&P, the SPY, which is the broader of the two indexes. The SPY is at its all-time high. We've marched all the way up to the highs. The QQQ, which represents the NASDAQ 100 tech index, has broken the highs, as you can see by the dotted line here. So the NASDAQ has broken the highs. The SPY is at the highs. This is quite a march to the upside, in the markets. And certainly, there is a case to be made that if you look at this as a candle, we got 1 month to go. If there was a time for you to take profit, it would be now, going into December. A lot of times a candlestick looks like it's got a little topping wick and a little bottoming wick. And, we're kind of at the top, which would be that we're a big, solid green candle. So it would be unlikely for us. I mean, that would be closing with a shaven head, to put it into Japanese candlestick terms. It's not a very likely end of year pattern. So probably, you're going to see some profit taking in December. The thing that has driven the impetus, the industry that everybody has been so psyched about, has been the artificial intelligence industry. And that industry is already clearly in consolidation, as we see, ChatGPT, Bard AI, Google, Microsoft, OpenAI. The big drama this week was the CEO of OpenAI, who was kicked out, and then everybody was going to Microsoft from OpenAI. So there's some drama and consolidation already in the AI space. Obviously, NVIDIA's earnings was a big mover in AI. NVIDIA had earnings this week. So certainly NVIDIA was another company that kind of drove the market up. So these kind of big AI plays have been the leading force in the market as we have gone to the all-time highs on the Nasdaq. So what does this mean for the stock market that has been driven to new heights by AI hype and the overall market rally? I view this is when the market is not moving up on breath, that is usually a sign for trouble. So the market should be moving up across the board with market breadth, meaning wide market action. If the market is not moving up on breadth and it's only moving up because of potentially hype or even excitement, legitimate excitement in one sector, that is a cause for concern, especially given the time of year and given the tremendous run we've had and what seems to be going on in the economy or in the world around us as people pile on and stack up credit card debt. Needless to say, it is what it is. You trade what is actually happening versus what you think might happen. And so far, the market action for the month of November has been incredibly, incredibly bullish. I mean, this has been a straight up, almost no look back rally from what was a recent new low in the market. So that's a not uncommon to see volatility at the end of a move as well from a technical perspective. All right, well, enough about all the news. Let me bring up my dash trader. And I already have the first chart up here, which is oil, right? So we have oil. We have a shoulder, a head, a shoulder, a neckline break. Now, why would I say that this is a neckline break? Because this neckline would go like this. This is the neckline. So that was the neckline break on oil. So certainly oil has broken its neckline. Now, probably it's going to snap back. So when you have a trend line break, you usually have a fade back to the trend line. Okay. Let's jump into MSFT because the run in Microsoft has almost been near exponential. This is all that AI hype that we've been talking about. So this is the, Microsoft has been picking up or been the beneficiary of the brain drain from OpenAI and other AI companies. They got big bucks. They can hire the brains behind the AI craze. Here is Goog. Goog at all-time highs, kind of a double top at 140. Here is NVIDIA, NVDA. So NVIDIA getting a little volatility, but I mean the run on NVIDIA from, you can see the all the way to the left of this chart of 150. NVIDIA is at almost $500, 492. You're talking, I mean, it was above $500. So from 150 to 500, I mean, that is an incredible exponential run over the course of the seems hype like and or not sustainable. But like I said, you got to trade what actually stops or until it gives you another indication technically. This is still a bull market AI field, AI sector. AMZN. Okay, we got Amazon. Amazon also at new highs. So you have Microsoft, Amazon, Microsoft, Amazon, NVIDIA, Google. I mean, these are all the biggest technology companies in the world, and they are all pretty much dominating the AI space. Now, I want to bring up Apple. Apple making a tremendous run to the upside, pretty much fading and filling the gap from the gap down and breakdown just prior to the recent sell-off into correction territory. So we've gone from correction territory, which was 10% down, to all-time new highs on the Nasdaq. Not quite new highs on the Nasdaq on Apple, but certainly near new highs. Apple had kind of gotten close to 198 and it's at 192 now, but it had gotten as low as 166 literally 3 weeks ago. So this is a tremendous run to the upside. This kind of run to the upside tends to be an envy buy. And you know what envy means, right? It's green eyes. It's when you look at something and you wanted to participate in it, but you couldn't, but then you get your chance and then you're kind of envious of it. So you're trying to pile in. The envy buy is usually a late occurrence in a mature uptrend. So now let's take a look at some other companies. Let's just take a look at Ford, old market economies. Certainly not participating in this rally. GM. Let's see Tesla. Tesla not participating in this rally. Let's take a look at Citibank. Okay, a little bit of a bounce. JPM. JPM runs up with this rally, but certainly not in an uptrend. Let's take a look at XOM, another old market, old economy. Here's oil. We know oil's been down. So certainly this is a rally that has been happening primarily in the tech space. Let's take a look at the old man, gold. Gold is on the march higher, right? Gold is kind of at the top of its range. So I'm not going to beleaguer this point too much. I'm going to wrap things up. I'm going to say before we wrap things up, a happy Thanksgiving to all of you from Dash Trader. It's been an incredible year. We look forward to 2024 and the holiday season. Stay up to date with all things Dash by signing up to our monthly newsletter. Fill out the form at the bottom of our webpage, www.dashtrader.com. Subscribe to our YouTube channel, Dash Trader TV, and the Dash Newsroom Reminders. Follow us on social media at LinkedIn, Twitter, Facebook, and Instagram. Again, happy, healthy, wonderful Thanksgiving. Enjoy your turkey and football. Signing off. Until next time, Michael DeGioia saying happy Thanksgiving to all. Trade well, everybody.